Hey everybody, how is it going? Welcome back to my channel. In this video, I want to go over GrowGeneration. This is one of the holdings in my M1 Finance account. It is about 2% of my portfolio. This is one of my long-term holds. I haven't done a video on GrowGeneration in a while, and they just came out with their earnings. So I want to go over their earnings highlights. Then I want to get into some recent news on the sector. And then I want to get into their chart and take a look at their current price action and see where it could be going, at least in the near future. Now, I'm going to get into the earnings first. This is just a highlight article. Going over the earnings, it's kind of a mixed bag. Some things were decent, some things were not. It didn't really knock my socks off, but it doesn't really make me want to get out of this stock either. I have a lot of hope for GrowGeneration in the next 5 to 10 years. I think this industry is definitely going to grow. So I'm planning on just sitting tight and accumulating more shares as the price is as the share price is low. But let's get into this article. This article says that GrowGeneration reports record fourth quarter and full year 2021 financial results and introduces full year 2022 guidance. Now, getting down to some of the highlights, it says they had a record revenue of $422.5 million and adjusted EBITDA of $34.5 million in 2021. They say that revenues increased 46% to $90.6 million in the fourth quarter and increased 119% to $422.5 million for full year 2021. So this company is definitely in growth mode. So there's going to be some volatility, obviously, with the company. There's going to be some ups and some downs. But all in all, those are pretty decent numbers. It says that the net income for the full year was $12.8 million compared to the prior year net income of $5.3 million. So you can see the net income is still pretty low for the company. These numbers hopefully will start ramping up pretty soon. It says their net loss for the fourth quarter was $4.1 million compared to a net income of $1.5 million for the prior year. So that definitely was going in the wrong direction. It says their adjusted EBITDA was a loss of $1.9 million for the fourth quarter, but increased 82% to $84.5 million for the full year of 2021. And they are expecting a full year 2022 revenue in the range of $415 million to $445 million, with adjusted EBITDA of $30 million to $35 million. And if my memory serves, I think that's right around the same numbers that they reported last time. But it says the company plans to open 15 to 20 new GrowGeneration garden centers this year. So the company is still in high growth mode, and that is definitely what you want to see. Hopefully these numbers start improving, which I'm guessing that they certainly will. But all in all, kind of a mixed bag, like I was saying before, but certainly some things to be encouraged about as well. But let's get into that news. All right, well, there was an article out today that was suggesting the legislative tailwind is back for the cannabis stocks. If we can recall, a little over a year ago, there was tons and tons of news coming out all the time talking about how, legislation is going to be passed that is going to be favorable for the cannabis sector, not only in certain states, but potentially on the federal level. But it seems like, at least for me anyway, I haven't seen nearly as much news coming out over the last 6 months, but this article is suggesting that could be changing in the near future. Getting into this article, this says that cannabis stocks have shown some bright signals so far in 2022, most particularly in February when the Secure and Fair Enforcement Banking Act passed the U.S. House of Representatives for the 6th time, but there is new hope that the bill will finally make it through the Senate this time around. If SAFE passes, it will be an enormous step toward fully legitimizing the cannabis industry on a federal level and helping to push it further into mainstream U.S. consumers' daily life. Representative Ed Perlmutter, a Democrat from Colorado, has been the main force pushing SAFE through D.C. channels for the past few years. His latest attempt will work to enfold the bill into a large-scale manufacturing and innovation bill with language related to the cannabis industry attached. So, what is the main hurdle? Well, the main hurdle in the Senate is actually that Senate leaders have prioritized a broader path to full federal legalization rather than the SAFE Act, which leaders see as an incremental step that could undermine pressure to fully legalize. So you can actually see that there is probably two different scenarios in which this gets passed on a federal level. Either way, it probably looks like it's good news for this sector. But actually, this says either way, there is a long-term legislative tailwind for the cannabis industry and for stocks tied to the space. Given their depleted valuations after years of consolidation, 2022 could be coming into focus as a pivotal investment opportunity for market participants seeking exposure to the space. With that in mind, let's take a look at some of the most interesting names in the cannabis space. And the first one they start talking about is GrowGeneration. They just talk a little bit about what they do, but they get into how GrowGeneration has recently announced an acquisition of horticultural rep group, HRG. And they say, with this acquisition, GrowGeneration is strengthening its global product supply chain and adding significant distribution of its list of private label products. Keith Harrington is one of the most respected executives and one of the early innovators in the U.S. modern horticultural market. We are excited that he will contribute his multi-decade experience to the GrowGeneration team. But even in light of this news, GrowGeneration really hasn't done much over the past week, with shares logging no movement over that period. And they get into how GrowGeneration managed to rope in revenues totaling $116 million in overall sales during the company's most recently reported quarterly financial data, a figure that represents a rate top-line growth of 110% as compared to the year-ago data in comparable terms. In addition, the company has a strong balance sheet with cash levels exceeding current liabilities of $93 million versus $72.5 million. So I think this was a pretty decent article if you are a shareholder for GrowGeneration or if you own companies in this sector. But it looks like maybe soon these stocks could finally start to turn around. All right, so jumping over to my TC2000 charting software, I have the daily chart for GrowGeneration up here, ticker symbol GRWG. But before I get into any of it, please remember, I am not a financial advisor. All of this is for entertainment purposes only. It's just my opinion, so please make all of your own trading and investment decisions. But looking at this GrowGeneration daily chart, you can see there has been a lot of excitement and a lot of pain as well. I first added this company to my M1 Finance account on this pullback right here. As the stock started to move up, it became greater than my 2% allocation in my M1, so it was not buying on this move up. Unfortunately, I didn't realize that we were going to have this big crash afterwards, or I would have sold it up here. If I would have owned this in a regular account, I would have definitely sold it on this run up. But in M1, I try to load up on companies that I think that are going to be bigger in the next 5 to 10 years. So I'm not really trying to time the market very well with these. But my M1 started buying it again as it fell below $20 a share. So it's been buying again on this way down. And I think I have an average cost of maybe right around 13 and change in my M1 account. So I'm still underwater on GrowGeneration. But the way that I think this company is probably going to continue to grow into the future, this is actually working out very well. I would like to see this company just continue to move, sideways to down over the next, 6 to 12 months, maybe a little bit longer, so I can continue to accumulate shares under $10 a share, hopefully. And then if the company continues to grow the way that it is supposed to, that's going to certainly attract some value investors and growth investors once the valuation gets low enough. So Now, that's the best case scenario. That is certainly what I'm hoping for. It's not going to bother me one bit if this stock stays under $10 for a while. I would love to have just a big pile of shares because I think eventually it's going to go on another run and, be back up here in the 40s, 50s, and 60s. And if I can accumulate a large pile of shares before it goes on that run, that would be optimal for me. Right now, it has a forward PE of around 40, so it's still a little spendy. Back up here when it was well over 100, I strongly considered getting out of it in my M1 finance account, but I try not to trade in and out of that account if I don't have to. And right now they have a market cap of right around 500 million, and their revenue is projected to be over 400 million for this year. So on a market cap to valuation ratio, it's looking pretty darn, of course that isn't all profit, but it's looking pretty darn nice. But let's take a look at some of the other stocks in this sector. Another stock that was in that previous article was TCNNF. This is one of my favorite stocks in the sector. I don't own any of this one, but if this thing falls below $15, it's probably going to be hard not to pick up shares of Trulieve Cannabis. One reason why I haven't jumped into the stock is they had some legal troubles, and I know a lot of people are thinking that that's nothing to be worried about, but that's, probably the main reason I haven't, dipped my toe in the water yet. But if this thing drops below 15, it is going to be hard to not to want to get some of this stock. Next one I like is IIPR. This is a real estate investment trust. They rent out properties to companies in this sector, and this thing has been a fast grower. I mean, it's such a growing sector. These guys, I expect them to continue to keep moving higher. If this thing drops below 150, I'm going to be very interested in this one. I think their dividend yield is only like less than 1%, so I'd like to see that continue to move up. But as far as how the company share price just continues to run, that dividend sure as heck doesn't mean a whole heck of a lot if this thing can keep moving up the way that it's been moving up. Another one in this, let's take a look at the ETF. One of the ETFs its symbol is MJ, and I believe that GrowGeneration is one of the biggest holdings in this ETF. But you can see, this just kind of encapsulates how the whole market, this whole sector got hot. And, the sector was high before, and this is when people like to own the stock when it's moving up. And when it gets down to something like this, nobody wants to own it, and then they want to own it again. But right now we're at one of those really low levels again. So historically, this is not a bad time to get into this sector. But I think MJ is a pretty nice way to play this sector if you don't want to pick individual names. Another name that was really popular was TLRY. You can see TLRY was super popular in 2018, had that massive run, and then at the end of 2021 also had a huge run as well. So this one has been known to get super hot, but now we are in that kind of, cooling off period where nobody's interested in this stock. And if TLRY can, move sideways, like I was talking about with GrowGeneration for a little bit, kind of put in one of these bases right here, this is what I'm kind of looking for. Maybe TLRY can go on another screaming run too. So TLRY is definitely one to keep an eye on. Another one is Sundial Growers. Sundial Growers is actually one of the bigger positions in that MJ ETF as well, I do believe. But Sundial Growers has gotten all the way down to 53 cents a share. So you can see some of these things are getting really, really cheap. Another one that was popular was ACB, Aurora Cannabis. You can see this one has fallen all the way down to $3.60. So, I mean, this thing is getting to the levels before they went on that huge run at the beginning of 2021. And last one I can think of is CRON. Kronos. You can see this one has fallen all the way down to $3.50 as well. I haven't looked at a lot of these names in many, many months, so these things have just continued to fade into the abyss. But if you look at the revenue growth on these companies, their revenue growth continues to go up. This is what it probably should look like on a revenue basis. The revenue has just been slowly increasing over time, but that's not how the stock market works. You go on these crazy runs when things get popular and then they get out of favor, then they get popular again. But, as you can see, that as the stock continues to move down in a stock that continues to grow, the revenue just continues to move up. but the stock continues to move down. And once they move down after a while and, carve out a little bit of a base, then they can put in enough of a foundation to go on another run. So that's what I'm kind of hoping. We're in the early stages of, a little base for these companies. And then hopefully in another 6, 12, 18 months or so, they can go on another run as long as, conditions in the sector remain favorable. But that's all I have for this one, guys. If you guys have any questions, please leave it for me down there in the comments section. If you have any other names in this sector you think that I left off this video that are worth looking into, please leave them down there in the comments section for me as well. I'd love to check them out. But I'm going to end the video right there. Thank you so much for watching it all the way to the end. And until next time, take care, everybody.